A slew of same-store sales reports this Thursday. One that probably surprised most analysts was Target, which had lowered its forecast earlier today, saying that same-store sales rose 4.1% in October. That beat expectations. Jim Cramer has been a supporter of this stock as retail has been suffering
Recommended
overall.
Target last week at 60, said it was right to buy, immediately went to 58. Lots of ridicule there. When I say, people don't understand. I've been saying, and I did it real money yesterday, you start buying when everything looks so bad.
Right.
The multiples are really low, and you wanted a catalyst. I've been recommending Gap stores. I've been recommending Target. I now see Kohl's lowered today, and the stock's at 50. I'm now going to start recommending Kohl's. Lowe's at a 52-week low seems interesting. Costco and Target have been my two faves. Costco because they're going to keep making the numbers because that's exactly where you shop when in a slowdown. It's just terrific. It's like the antidote to retail. But Target, I have been saying, will be interested and intrigued with its stock down here. With selling its credit card division, that would bring in $7 billion for the possibility of buyback. They also own a lot of the real estate. They could be very clever. It's like Sears owns a lot of real estate, but that's a separate issue because Sears is doing quite poorly. Target's actually doing quite well. And I think that when you can get Target at this kind of low multiple, you will look back 4 or 5 years ago and say, you know what? Why didn't I buy Target when everyone had given up on it? Target's got a great growth path, mid-teens growth rate, possible gigantic buyback on this event, this catalyst, which they said they'd review by the end of the year. It's hard for me not to think that you should own a stock that could be down 5, but up 15. And when I say could be down 5, if Target went to 55, it wouldn't shock me. Although this quarter demonstrates to me, and now we're going to get some cold weather, this month may have been the worst month that you're going to get, and it was pretty good.
And Jim, I'm trying to understand, when Target a few weeks ago lowered its forecast for October, saying that they would get anywhere from 2 to 4%, that was down from 3 to 5%. The stock sold off on the news. Was that a case of Target under-promising and now overperforming, or they really thought they were going to get hit?
I have a theory that I put in my last book, my Mad Money book, Watch TV, Get Rich. And the theory is that monthly numbers have become too hard to predict, and companies should get out of that monthly number business. The weather got cold at the end. So you move some merchandise. Halloween was good for them. But the idea that you can forecast these monthly numbers has become, as we know, just a hedge fund game. The hedge funds play it. They're short zoomies. They're long Target. And my advice to the companies is stop trying to forecast. It's just too hard on a month-to-month basis. And I think that was the case with Target. They lowered, betting that the weather trends would continue, and they didn't.
All right, an honest bet. Yep. Thanks a lot, Jim Cramer on Target. You're watching TheStreet.com TV. Stay tuned.